Franklin Templeton Assets Management India has assured the Supreme Court that it will not launch any fresh debt scheme till the Securities Appellate Tribunal decides on the legal validity of the SEBI decision, which had barred the company from launching any new debt scheme for 2 years and had also asked for a refund of Rs 512 crores. As the top court refused to interfere with the SAT order, Franklin Templeton will have to deposit Rs 250 crores in an escrow account as per the schedule fixed by the SAT ruling. Turning down SEBI's appeal against the SAT order, the top court asked the appellate tribunal to decide the case expeditiously by hearing objections raised by the regulator as well as arguments by the asset management company. The two-judge bench of Justice S.A. Nazeer and Justice Krishna Murari also refused to pass orders on SEBI's request to make Franklin Templeton deposit Rs 512 crores in the escrow account till pendency of the case before the Securities Appellate Tribunal. The court disposed of SEBI's appeal, which had contested the SAT order, claiming that it was based upon wrong facts and had ignored all laws. On the 7th of June this year, SEBI had barred Franklin Templeton from launching any new debt scheme for 2 years. The asset management company was also asked to disgorge the investment management and advisory fees of Rs 512 crores, which also included interest from the 6 debt schemes which were wound up on the 23rd of April last year. SEBI had held that Franklin Templeton committed serious lapses with regard to scheme categorization, alleging replication of high-risk strategy across several schemes. SEBI had claimed that the lapses were a fallout of Franklin Templeton's obsession to run high-yield strategies. SAT thereafter stayed SEBI's order on the 28th of June, which prompted filing of an appeal before the Apex Court. On the 14th of July this year, the top court had upheld the legal validity of SEBI's rules on closure of debt fund schemes, which mandate that schemes can be shut down only if majority of the investors agree. The court had noted that the consent of the unit holders is to be obtained post-publication of notices. The two-judge bench back then had allowed the market regulator to intervene in case of violations and wrong decisions taken by trustees to wind up any scheme. Section 11B of the SEBI Act allows SEBI to act in the interest of investors for orderly development of the securities market and prevent any intermediary to behave in a manner detrimental to investors. The top court had agreed with the Karnataka High Court's findings with respect to winding up of Franklin Templeton debt schemes and had also upheld mutual fund regulations. However, the court made it clear that it had only examined the theoretical interpretation of law and did not delve into the facts of the Franklin Templeton debt schemes case, asking the petitioners to move Securities Appellate Tribunal where the appeal against the SEBI order was already pending. Franklin Templeton and its unit holders were back then asked to seek an early hearing before the SAT, where the case is currently stated to be heard on the 20th of October.